I want to talk a little bit about how longer time frames still are, they rule for me more than the shorter ones. So what I've done here is I pulled up a 2 month chart, basically going back to the first of the year. This is the NASDAQ, and you can see our point of control continues to be right here at 51.55. Now, the high value node we broke out of post-Trump speech here, but today we're really struggling, and I continue to say that if we break below this 53.60 here in the next 2 hours, 2.5, 2 3/4 hours into the close, this is going to be pretty bearish overall because it's going to put us right back into the high value node, which might give you an opportunity for a bounce trade. But I would have a very tight profile on that, because if we get below 10 or 53.20 again, then you come into the structure that we've been talking about for really the last couple months that is very tenuous. This is not a foundational structure for me. If I'm a bull, this is not what I want to see. The reason why there's so many holes like this is most of this move continues to have happened overnight and in markets that were not liquid and were not widely traded. As to the why that happens, you can go on and place your bets and make some judgments there. It doesn't really matter. But the story is this profile is not very robust for a continuation higher. It doesn't mean we can't go higher, but this type of thing is what I look at from the big picture, market structure wise, and kind of where we are in the juncture of this move. Again, 600 points from election night here gets you to about 12% move, which is a powerful move in less than 4 months right now. So what I want to point out here is that you can be bullish, but below 53.20, you better be reversing your hat and looking for a move back down at least here to 51.58 or so. This has been the same number for a long time. Now it changed on the 1 month. Well, what do I mean by that? Because a lot of people will talk about different time frames. So if you just go back to the 1st of February, our VPOC did get pulled up. Okay, so for on a short-term chart, here's that number, 53.40. So if you're bullish on this time frame, you want to buy 53.40, you want to buy down to 53.20. But we just looked at a longer-term chart, and which tells us the same thing, but more data, more time. So a break below 53.20, regardless, is bearish on both these time frames. All right, so again, bearish for me just because we have no continuation today. So it felt blow off yesterday, and it is obviously blow off in its appearance and behavior today. As we've sold right off, we spent most of the day up there yesterday and couldn't go higher. If we close below where we opened yesterday, again, it's a short-term bearish signal for me, and I'll continue to sell rallies. Now, doesn't mean I might not want to take a stab down here at, say, 40 to 25, but ultimately that concerns me, and if we can't hold 53.20, I believe we're going to go lower. Again, this is not a prediction business. I'm just saying what I will do, how I will behave if we get to these levels. So right now, bearish higher and bearish below here. You could take a stab on the long side at anywhere from 53.40 down to 25. That's a very low risk as long as you're out and reversing below 53.20 on closing price levels. All right, hope that helps everybody. If you have any questions, just reach out to us at the Market Profile Trading Academy. We've got a number of programs. We'd love to work with you. Give us a shout, give us a call, set up a consult, and we'll talk soon.